From a record low of 80.06 per dollar touched in late July, the rupee has pulled back to 78.79 per dollar levels. The reversal has been aided by a break on foreign investors' exodus, weak crude prices, and the dollar. For instance, the US dollar index has cooled off to 106th level from its 20-year high of 108.5 touched last month. The move came as the US Fed downplayed recession fears and hinted at a likely slowdown in rate hikes. However, any decisive move in the currency is dependent on foreign flows and the RBI's rate hike trajectory, analysts say.
First of all, we look for the dollar inflows. So if you have seen that the FI have been turning on a buy side, that is a positive side for the rupee. Apart from that, we see that the good monsoon has given some kind of relief to the RBI in front of the inflation. So inflation could come down in coming months. So that will give the a boost, or you can say some support to the RBI to not to go too much hawkish following the developed market central bank. So that's another point. Apart from that, we have seen that the crude oil prices has been stabilizing around 110 level. So that is the another factor. So these are the few factors which are supporting the rupee. The only thing which remain on a concern side will be the geopolitical tension.
Besides, analysts flag India's strained external position as another dampener for the currency. A note by Bank of Baroda says, trade deficit continues to be at a record high, which will put pressure on the balance of payments. Imports may moderate due to softening global commodity prices, but exports will be muted amid weak demand in key markets like the US and Europe. Sharing similar views, Amit Pabari of CR Forex Advisors expects the recent pullback to be unsustainable. According to him, the recovery in rupee was driven due to triggering of stop losses as the majority of the market's punt was long on US dollar, and short covering of the same aggravated the move. The currency will likely bottom out and resume its upward journey towards 79.5 to 80 levels. That said, analysts believe that any further relief in the rupee will be most beneficial for oil marketing companies, which can offset the losses taken on the marketing margins. Traditionally preferred IT and pharma companies also remain preferred bets given their strongly hedged positions against currency volatility.
So I think historically speaking, markets look at IT, pharma as sectors to look at in this kind of a scenario. Even given the opportunity that lies ahead with export potential, I think specialty and agrochemicals companies should also do well, given the China Plus One policy and the performance of the specialty and agrochemicals sector in terms of numbers for this quarter and of course going forward for the current quarters to come through.
Today, besides corporate earnings, the Bank of England's interest rate policy outcome will also be on investors' radar.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.